Hello and welcome. In this explainer, we're going to break down how your business can confidently navigate the often turbulent waters of international trade. We'll be looking at a really powerful safety net, one that was designed right here by the government of India, all to help you succeed out there on the global stage.
So, you're thinking about taking your business global. And why not? It's a huge opportunity, right? A chance to get your products out to the whole world. But it also comes with its own unique set of challenges. And probably the biggest one, the one that keeps every business owner up at night, is that really simple question. What if I don't get paid? Okay, so let's start right there. Let's dive into the risks of global trade. Because, to really get a handle on the solution, you've got to understand the problem first. And as an exporter, you're really looking at two very different but equally important kinds of risk. And here's the breakdown. On one side, you've got what we call commercial risks. These are all about your buyer. Maybe they go out of business, or they just fail to pay you. Simple as that. But then, on the other side, you have political risks. Now, these are the wild cards. They're things happening in the buyer's country that are totally, completely out of your control. We're talking about things like a sudden war, or maybe the government slaps on an import ban, or just changes the rules in a way that blocks your payment.
And this really puts it into perspective, doesn't it? It doesn't matter how good you are at your job, how careful you are. Just one single large payment that goes missing, well, it could threaten your entire business. That kind of uncertainty, that's exactly why having a safety net is so incredibly important.
So the big question is, how do you protect yourself from all this? Well, this is where that export safety net comes into play. You see, the government of India saw these challenges a long time ago and set up a special organization just to help exporters like you.
And that organization is the ECGC, the Export Credit Guarantee Corporation of India. Its mission is actually pretty simple. It's got two main jobs. First, protect you from the risk of not getting paid by your overseas buyers. And second, make it easier for you to get the money, the financing you need from banks to actually run and grow your business. And, the ECGC isn't some new kid on the block. It was actually set up way back in 1957. It's grown and changed over the decades, which means it has a long history of being a stable, trusted partner for Indian exporters. It's been there, adapting and supporting businesses just like yours for a very long time.
Okay, so let's get into the nitty-gritty. How does this safety net actually work? How does it ensure your payments? We're going to look at the main tools that ECGC gives you to protect all that hard-earned revenue.
All right, so ECGC has different policies depending on the size of your business, which is smart. If you're a larger business, say with a turnover of more than 50 lakhs, you've got the standard policy. It covers 90% of your loss. But, and this is great, for small and medium businesses, there's a special small exporters policy. And check out the benefits. The coverage is higher. 95% for commercial risks and a full 100% for political ones. Plus, if you have to make a claim, the waiting time is cut in half, just 2 months instead of 4. That's a huge difference.
And the process to get covered? It's really meant to be simple. Just 3 steps. First, you get the policy that's right for you. Second, every time you send out a shipment, you just declare it. And third, if a payment is late, you report it. That's it. It's designed to just fit right into how you already do business.
But wait, there's more. Seriously. Ensuring your payments? That's only half of what ECGC does. It also plays this other, absolutely critical role, helping you get the funding you need from your bank to make and ship your products in the first place.
And you might be thinking, hang on, how can an insurance company help me get a loan from my bank? And that's a great question. This is where the whole guarantee system from ECGC really shines. Think of it like a bridge of trust between you and your bank.
Let me walk you through it. So you need a loan, right? To get a big export order ready? Your bank looks at it and, they see some risk. It's just natural. But then ECGC steps in. They go to the bank and provide a guarantee. They basically say, hey, if there's a problem, we'll cover a big chunk of your loss. And just like that, the bank's risk goes way down, and they're suddenly much more willing to give you the money you need.
And it's not just one type of guarantee. ECGC has a whole bunch of them for every stage of the process. There's a packing credit guarantee for when you're making and packing your goods. There's a post-shipment guarantee for after you've sent them off. They even have guarantees for performance bonds. Each one is another tool in your toolbox to make your business more bankable in the eyes of the lenders.
So you've got insurance for your payments and you've got better access to finance. When you put those two things together, what does that look like? Let's talk about what it really means to export with total confidence.
All right, let's bring it all home. What are the key takeaways? First, know your risks, both commercial and political. Second, use the ECGC policies as your safety net. It's there to catch you. Third, use their guarantees to unlock that bank finance you need to grow bigger and stronger. And when you do all that, managing risk isn't just about playing defense anymore. It actually becomes your competitive advantage. It lets you go after opportunities that your competitors might be too afraid to touch.
So by turning risk into confidence, you're literally opening up a world of possibilities. The only question left is, with all that sorted, where will your business go next? Thanks so much for joining me for this explainer.